based on the overwhelming success of the ballot measure, I think they will be, getting it, floating it in other states as well. But right now, one of the things that dental insurance companies could do is just choose to leave the state of Massachusetts and not write dental insurance policies in the state of Massachusetts.
Sure.
All they have to do is go one state over, then go to New Hampshire, then go to Vermont, they can go to Connecticut, they could go to Maine.
And also, I think Massachusetts is different, where they would put something on a ballot, but some states it's done by the politicians, right? So and these guys have money up the wazoo to buy the politicians.
Right. So they could simply decide not to write dental insurance policies in the state of Massachusetts and just write them in the other 49 states. Now, if the ADA is successful at getting this in a much wider exposure, then that strategy could fail a dental insurance company. Right now in the state of Florida, Naren, there are many property loss insurance companies that have left the state of Florida in property loss because of the massive losses they've taken.
Flood insurance.
Due to hurricane damage and flood insurance. So there are many, property loss insurance companies that have just said, hey, I'll write insurance policies in other states, but we're not going to write them in Florida due to the fact that we've been hammered with hurricanes and floods.
What happens in Florida, if I'm not mistaken, at least in this example, is I think the government ends up underwriting a lot of these flood insurance. So you have one supplier who's
actually, what's really happening is there's many people in Florida that cannot get flood insurance.
That's true too. Yeah.
Just like people who live in California not being able to get fire insurance. From wildfires, because again, the loss has been so extreme that it doesn't make sense for an insurance company. They can't make money
unless you're willing to pay an arm and a leg. Yeah, exactly.
It's crazy. So that's one possibility that insurance companies can lead. I want this to be a positive toned episode, and I do want everyone to know this is a positive, but it doesn't explain where the ballot measure doesn't necessarily explain how they meet the goal of spending 83% on patient care. They could choose to lower, the insurance company could choose to lower premiums for the employer, in turn signing up more employers, and that could be one of the ways they meet that 83%, lowering premiums to the employer, right? But I haven't seen any pattern of dental insurance companies ever factoring in the dentist in the way they make their policy decisions.
Mm-hmm.
There's four constituencies in the dental insurance game today. There's a dental insurance company that writes the policy. There's the dentist that provides the care. There's the patient that receives the care. And there's the company that buys the policy. In those four constituencies, there's only one winner today.
The insurance company.
The dental insurance company. The dentist loses because he or she has to accept massively reduced fees to be part of their preferred provider net. The patient loses because of all the games they play. Heaven forbid that a wonderful patient of yours should come in 5 months and 29 days after their last hygiene visit for their next hygiene visit. That claim will be stamped denied because it didn't have a 6-month wait. And the company that buys the policy loses because they're being gouged massively to support the massively high executive suite salary and bonus programs they have.
I was just curious, the last couple of weeks, I was kind of looking at some of our clients, Gary, who have pretty much gotten rid of insurance. And I looked at their marketing spend because, insurance is a marketing expense because they send you new patients in exchange for the write-off. And I looked at 10 clients. The average is 0.7%, as opposed to the average write-off is 45%.
Let me amplify that. 0.7, that's 0.7%.
Right.
And what have all the experts said on appropriate marketing budget? 3 to 5% of your revenue.
Yes.
3% if you're willing to accept a slower growth, more like single-digit percentage growth. Right. 3, 4, 5, 6, 7% percentage growth. then spend 3% of your revenue. So in other words, if you have $1 million practice and you're spending 3% of your revenue, you're spending $30,000 a year on marketing. If you want more aggressive growth, double-digit percentage growth, 10% or more, then it'd be wise to spend more on marketing, more like 5%. So if that $1 million practice had goals of achieving double-digit percentage growth, then they would have a budget more like $50,000 a year. And now what you're saying at again, I want everyone to understand the math here. 0.7%. 0.7%.
0.7%.
0.7%.
And the very same practices a few years ago were giving insurance company this invisible check of $400,000, $500,000 every year, not just one time, every single
When
year.
you say that invisible check, what you mean is the amount of the insurance adjustment category, the amount of money that they're writing off by being a participating provider. So the difference between your usual fee and your contracted fee is that insurance adjustment or that insurance write-off. And like you said, I've taught that for years, that every dentist needs to look at that number as a marketing expense, because they quite literally are spending that money on marketing in the form of the Delta sending them patients. I use Delta because they're the 5,000-pound gorilla. I could have plugged in any name of a PPO plan.